A big welcome to everyone, and thank you for joining the Tokenization in the UAE Part 2 webinar. Wherever you're joining in the world, welcome and very happy to have you with us today. And thank you to our host, DigiShares, for the opportunity to get this excellent group of experts and this panel together to discuss a really exciting topic here. So 2025 has been a landmark year for the UAE in regards to tokenization and RWAs. We've seen regulatory clarity and official frameworks that are accelerating adoption. You may have heard in May where VARA was officially recognizing issuance and secondary market trading for tokenized real-world assets and massive market momentum with some big projects in the UAE creating a buzz that people are hearing about globally and just changing what it means to work in the crypto space and tokenization projects. With this being said, I would like to welcome Klaus Scanning, CEO and co-founder of DigiShares, for his opening remarks.
Thank you very much, Tarek. It's a great pleasure to have everyone here today. And Tarek, I think you should introduce yourself afterwards when I give the word back to you.
Yes, sure thing.
Welcome everyone, and thank you for joining us here today. My name is Klaus Scanning. I'm the CEO of DigiShares and Real Estate.Exchange. It's a pleasure to see so many clients, partners, and industry leaders gathered here to discuss tokenization in the UAE. We actually have more than 300 signups for this event, so it's a record for us. Over more than 80 events we have conducted over the last 6 years. So there's a lot of interest in the topic. Today we power more than 200 clients globally, and we are proud to hold, I think, the largest market share in the UAE in terms of white label tokenization solutions, and most regulated firms are now running on our technology. We built strong ties with the regulators and the Dubai Land Department. Our platform has been audited multiple times. This should also mean, in principle, that if you use our platform, you should have a faster and smoother approval process. We also recently welcomed a strategic investment from Valerium, a UK-listed crypto company, which will further lead to strengthening of our position as market leader. We see very strong momentum at the moment, signing up multiple new clients every month and having many meetings with clients based in the UAE interested in tokenization. We are also helping to develop global interoperability standards, both in relation to the token protocol itself. There will be a big announcement about this next week, but also regarding the decentralized ID and the KYC part, where we are launching Global Investor Passport, or called DITO, Decentralized ID for Tokenization, and rolling it out to our clients and exchange over the next months. So I will personally be in Dubai next week, where we are hosting a physical masterclass at Davos Hub on September 11. Everyone is welcome to join us, and you can stay connected with us by looking at our homepage, digishares.io, signing up for our newsletter. So today you'll hear directly from several of our clients and partners who are putting tokenization into practice here in the UAE, creating new opportunities for developers, investors, and the broader ecosystem. I have one single slide that I would like to show, then I will give the word over to Tarek. Just a second. So based on our years of experience in the UAE, I see a number of different ways to actually tokenize. Tokenization is not such an easy concept, right? There's a legal, a business, and a technical aspect of it. And in fact, the legal aspect is often the most important one and also the most expensive one. And I think that all the speakers here today can maybe comment and see and let us know if they see other ways to move forward. And especially Matthew from the legal firm can comment as well. But we see these 5 alternative ways to get started with tokenization. One is, of course, to tokenize via an SPV and tokenize the shares in an SPV that owns the underlying asset, getting your own license. This is the first option here, which is gives you full control, but it's also expensive and takes a long time to achieve. Second one is to tokenize for an SPV and rent a license, rent access to a license from someone else who has taken it out. This is less expensive, faster, and so on, but of course you will have less control and less sort of branding opportunities. The third one that we will also hear about today is maybe the most exciting one and the first of its type in the world, where someone has tokenized the title deed directly in collaboration with Dubai Land Department. It's government backed, gives a strong trust, but until now it's limited in scope. Few have access to it, but hopefully it'll open up soon. You still need a license to carry this out, so it still carries the legal expense. But otherwise, I think it's a great option. We also see, not so much in the UAE, but definitely in many other countries, other securities being used, debt instruments, revenue share, and so on. This gives more flexibility. You're not locked to the shares. You can do multiple tokenization projects from a single SPV. So legally, it should be less expensive, but of course, you still need a license to operate in the UAE. The last one is maybe a little bit of a joker, but in reality, you can tokenize out of the US, even if you have a UAE-based asset. You need to set up a US entity that owns the UAE entity that owns the underlying asset. In principle, you can tokenize the US asset, offer the tokens to investors and so on, without having a UAE license. So this is fast, inexpensive, but it is a more complicated structure and there will be tax issues possibly. So very short summary. I'll give back the word to Tarek, and everyone have a great session today. Thank you.
Thank you, Klaus. And it looks like we have some interest in the in-person session next week. So, Kristen, thanks for sharing the link there. And Klaus, thanks for reminding me. Quick introduction of myself. My name is Tarek Erk, and I've been working in the digital asset space since 2017 with firms such as Paxos, and for the last 5.5 years at Crypto.com. I've worked globally in the digital asset space between New York, Singapore, and now calling UAE home, and quite happy to be here in a very exciting time in our industry, in our space. And so with that being said, we can move to the speaker presentations, where first we have Scott Teal, CEO and co-founder of Tokenvest.
Thanks very much, Tarek and Klaus, for hosting. Pleasure to be here. I am sitting in Dubai today at the epicenter of the RWA tokenization movement. I don't have a deck to share, so I'm just going to speak and maybe leave some questions. I know, Tarek, you'll have some tough questions for me at the end, so I'll leave plenty of time around. I mean, this is a journey that I've been on for around 7 or 8 years. My background, I was a lawyer for many years, and I agree with Klaus's observation that perhaps sometimes the legal and regulatory is the toughest piece of RWAs. The technology is not simple, but it can borrow from crypto. But as you move into these more complex regulated financial instruments, which RWAs typically are, it's this: how do I bring one of these assets to market legally and compliantly? And really, this is where Dubai and VARA in particular has distinguished itself from other parts of the world where there is either a lack of clarity or indeed a lack of regulatory frameworks at all to support this type of activity. It's the reason why I've moved to Dubai and we've set the business up here in Dubai. The market opportunity is the first point I really want to jump in on, because crypto, and I've been heavily involved in crypto. I've sat on the board of a layer 1 protocol. It's amazing technology and it's a very interesting industry. But when you actually look at the scale of the crypto industry, it sucks an awful lot of oxygen out of the room for what is in fact a pretty small asset class. Even at kind of $4 trillion, that's a relatively small asset class in the scheme of global asset pools. Residential real estate alone is somewhere in the region of $300 to $400 trillion, so 100x crypto. So that kind of market opportunity and the ability to take those assets that are currently either illiquid or difficult to buy because they're expensive, using this technology and these regulatory frameworks to give people access to these very desirable asset classes is the enormous opportunity that we sit on. And for me, the other market opportunity here is one around the redefinition of the global financial hubs. We have traditional global financial hubs that have existed in TradFi. They will not necessarily be the future hubs. They might be, but we also see the opportunity with markets bringing in these new regulatory frameworks and supporting the development of this industry. And for me, the real kicker is capital formation, and that's been the challenge. Even in places today where it looks like you can do these issuances, capital formation and then trading of these digital assets is still a difficult regulatory challenge. And so what we've seen with some of the first pilot projects here in the UAE, and what we're about to see with a number of projects coming to market, some of which we'll be announcing in the coming weeks, is really the opening up of bringing assets on chain and allowing them to trade in the same kind of way that we see with crypto, but representing real world assets. In terms of the platform differentiators that this is going to bring, and one of the reasons why we work with DigiShares as well is, it's this hybrid of Web3 technology, but Web2 user experience. A lot of people we speak to are somewhat put off by, Web3 interfaces, by being able to deal with DeFi and the kind of degen aspects of Web3. And that's great if you're in that ecosystem, but an awful lot of people are not. And so actually bringing, this is what we've done at TokenVest, along with using DigiShares as our back end, is bringing a very Web2 looking experience to what is ultimately a Web3 product under the hood. But you don't need to, do the degree in blockchain technology or cryptography in order to come on and participate as an investor. So I think that's a really important piece around this, along with that regulatory framework. For investors, what we're seeing, with this is the opportunity to lower the buy point, lower the cost of acquiring a piece of an asset if you can't afford a whole house or a whole villa or a whole piece of Millennium Fund or whatever the asset might be. Tokenization represents a way of actually giving people access to those products at a much smaller price point. The other really critical piece around the technology is then the liquidity that comes with it. Once it's in digital form and trading on a platform like ours, you can exit. You can exit quickly, just like you can from TradFi, like a stock exchange, or Web3, like a crypto exchange. But now being able to move into or out of your fractional investments in hard assets, whether they're fine art, fine heritage cars, classic cars, art, any of these types of things that exist out there. So that's going to be a really fundamental difference. And we saw with NFTs that there is huge retail appetite for participation in this market. The problem with the NFT market was you couldn't do fractional, because as soon as you fractionalize, you're into these regulated products, which is the solution we now have with the VARA framework. One of the features of the VARA framework is its revisions that happened. The law changed substantially in May and with effect from June of this year, where there's been a lot of clarity given around how you actually bring a tokenized RWA to market. There's been the introduction of a new asset class called the asset reference virtual asset. There's been the introduction of a new license. So all of these RWAs, as they're known, or ARBAs as they're called under VARA, now fall within category 1, and you need an issuance license to bring these things to market, which is something we are in late stages of pursuing as well. So we'll be able to do that. That's not a trivial process. I think people sometimes underestimate the level of commitment and rigor associated with getting through these regulatory processes, getting licensed, and being in a position to do this. But once it's done, we do have that regulatory clarity, and then people can actually bring these assets to market. So it's a super exciting time. I think we're going to see over the next 6-12 months the move from some of these sort of early stage pilot programs into a real digital transformation of finance, with Dubai sitting very much at the forefront of that. I'm going to pause there, Tarek, because I think you've got some questions for me.
Yes, I do. And thank you so much for a very thorough overview and very, very informative. So Scott, first, TokenVest is aiming to make real world assets investing simpler, smarter, and more accessible. Can you elaborate on how tokenization aims to achieve this?
So simpler, you'll be able.
I think we're having some
Sorry, am I back? I just
link.
froze there.
Yes, you're back. Yes.
Sorry, let me start that again. I suddenly launched into it and everyone was frozen. So simpler, smarter, and more accessible. Simpler, our Web 2 experience with Web 3 under the hood allows people to come on once you've done your AML KYC, which is the one-time thing as you would expect with any investment platform. You're then able to browse, visual and informative products, and really at the click of. Yeah. Let's check I'm back. I'm going to go off camera in case I'm having a problem with bandwidth there.
Yeah, that may help.
All right, sorry about that. In terms of smarter, so the digital processes that we've baked into the tokenization and indeed the underlying asset structures eliminates lots of the paperwork and intermediaries. That means not only faster settlement, faster acquisition, and faster liquidity to exit, but ultimately better products. And I think this is where all of the intermediaries and sort of TradFi checks and balances that exist because technology is unable to automate some of those functions, that produces less good products. Ultimately, investors pay for that inefficiency, and so these digital processes and technology does allow for a better product to be able to come to market. And then there's the real-time kind of portfolio tracking and transparency. Now, this, Tarek, in your experience particularly in the sort of crypto exchange world, it's amazing what people can do in terms of tracking, automating, staking, using all of these interesting Web3 aspects.
Absolutely.
Now, imagine apply that to real-world assets. So we're now going to be able to turn what are liquid hard assets that are not particularly tradable and hard to get into highly liquid, interesting, collateralizable assets. So, simpler, smarter, more interesting.
So I'm going to leave you with a quick one here, Scott, before we move to our next presenter. What
Sure.
are you seeing as in the most demand for tokenization from investors within the UAE or maybe globally?
Globally, we did a report earlier in the year entitled "Where are all the tokenized assets?" Because the short answer is there aren't that many. In reality, it's still a very, very nascent stage in the industry. And if you look at it, it's a mixture of trade finance, tokenized commodities like gold, and a little bit of real estate. I think the better question is, what do people really want as opposed to what they're actually buying? People often will say, oh, there's no liquidity in tokenized securities. No, there are no tokenized securities. So you can't blame a lack of liquidity or investor interest. If I look at the assets we have in pipeline and the investor demand that's building towards the launch of those assets, it is, of course, real estate. It's an obvious and fantastic use case, but not even just at the kind of fractional land title level. It's at project financing, higher up the chain within the the entire real estate industry as well, infrastructure projects and the like, commodities, precious metals, and then digitized, fractionalized fund products. They're all attracting a lot of interest.
Thank you very much for that. And next, we will be going to Ishwari Gupta, Head of Payments and RWAs at Polygon.
Thanks, Eric, for having me here. Thank you everyone for joining in. I also don't have a presentation, but of course, would love to talk a little bit more about Polygon. So I think Polygon has been in existence for over 6 to 7 years. I think our blockchain has been active, and just talking about the stats today, if you look at the overall numbers from the number of assets that have been issued in the tokenization phase, we are just second to Ethereum. So Ethereum has around somewhere 358 or something assets issuances as per RWA.xyz, and we are at somewhere around 258. I think last week we just passed over $1 billion in real world asset tokenization, and we have been heavily invested into two verticals right now. One has been payments, and the other has been like real world asset tokenization. And I think specifically just talking about the Middle East market, I think we have been in the Middle East market for quite some time. Like I think our founder Sandeep, who is the chairman and CEO of the foundation as well, is also here. We have a big office here at Al Quoz as well for anyone to actually come in and work from here, and that's available for everyone who is there working in the Web3 space. So that being said, in the Middle East, I think we've started like kind of having our efforts into talking to a lot of regulatory bodies such as like VARA, DIFSC, ADGM. So we have started actively engaging, trying to kind of understand the needs, and then like also like I think later in couple of months we are launching incubations with these regulatory bodies. So we are having those conversations as well, where we can bring in more of those tokenization platforms or like places where tokenization is happening in all phases, just like real estate, private credit, money market funds. So all these things are something that we're already working on, and we want to bring them more into the ecosystem from a regulatory perspective, getting all the approvals from the regulatory side. I think that has been one thing that we are doing with the regulators. Apart from that, we have been actively kind of helping the startups also in the region to kind of get more tokenization done, helping them with like investments, helping them with grants, helping them with any other ecosystem support that is required strategically to kind of help them grow their business. So that has been also something that we have been kind of already working on. That like I think in less than 3 months since we kind of like fully started activating all these things, we already have like four startups that we are kind of incubating right now. One is like majorly in the real estate side. The other one is in the commodity side with gold as the prime product. And then there are two other companies which we have just started incubating in the payment side, which would be kind of working more towards building the payments ecosystem. This is not an exhaustive list, but this is something like just trying to share that if there is opportunity in the market, and there is something that we can work together, like I'm all ears, and we are more than happy to kind of help you provide all the support that is required. I think a couple of efforts like we will start seeing like very soon, via the way we are kind of going out and activating all the things here now in Middle East. And yeah, feel free to kind of reach out if you have any questions, if you want to kind of have any understanding on how we can go out and help you in the region. Happy to help you there.
Yes, so Ishmael, can you share a little bit more about the underpinning of the technology for tokenization and where Polygon comes in there?
Absolutely. I think a great question. And the beauty about like tokenization on Polygon is, so first of all, like the tokenization on Polygon started way before, like in like most of the other blockchains actually started working on that. So that's why we had a head start. Like why we started with all the major funds in US. So like all the money market funds, like Franklin Templeton, Hamilton Lane, BlackRock, like Apollo Credit, all these funds are available. So that has been one thing where like we are not just like, so we have been ahead in the market. The second thing has been like we have tapped into every geography. So for example, in US, we have a lot of funds. In Europe, like recently you saw like the first ever like tokenized equity happening on Polygon. Then there are bonds that are getting issued on Polygon, like in terms of like some of our partners which are there. They're fully regulated kind of platforms which are available as well, such as DigiShares itself. In the Middle East also, like I think we have a couple of good partners who are kind of coming in. So every geography that is there across the world, even like I think we've just kind of like announced our investment in a tokenization platform in Singapore, and like we are getting like from China, from Hong Kong, a couple of other assets. So that's why like it becomes like a lot more global. From the perspective of like irrespective of where you want to tokenize, there are platforms, there are regulated platforms which are available for you to go out and do that. There are assets which are there, and there are a lot of asset managers that we are now directly working with, which effectively can actually go out and scale your tokenized products across the world.
So as many of us, I think here are UAE focused in our roles or living within the UAE. what's the most innovative way you've seen Polygon's technology used for tokenization within within the UAE?
I think within UAE, a couple of things have already happened. Like if you look at, I think the biggest one example is sitting in the room itself with you guys, effectively like kind of going out and having the SPV model of like tokenized shares being used. I think we were talking to VARA like 2, 3 weeks back, and like I think there are around 40 total licenses that have been issued by VARA. Almost like 35% of those like certificates of for the platforms, they support Polygon overall. So I think that is like a good number to start with. Like if you are a broker dealer, the licenses from VARAs are issued to platforms which are there. Even like for the trading perspective, there are platforms which are there, which are already doing that. We are accelerating the actually growth of this. And that's why like I've been spending a lot of time in the Middle East now myself to kind of grow the system. And I think in the next 6 months is something where you'll see a lot more of that ecosystem support from the government side opening up to kind of help us more in the tokenization front. Not just in like in Dubai, but in Abu Dhabi, as well as some other regions that we have just started talking to expand into those regions.
Excellent. Thank you so much, Ashwari. It sounds like exciting times for Polygon, and appreciate your insights.
Absolutely. Thank you so much.
Thank you. Next, we have Joseph Alam from Pripco, probably a name you certainly know if you're following the tokenization space in the UAE. And Joseph, thank you. I see you have your presentation up and ready, so over to you, sir.
Thanks, Tyler. Appreciate it. And also, thank you so much for DG Shares for the invite. Highly appreciate it. So, hello, everyone. Thanks for connecting. My name is Joseph Elam. I'm the General Manager of Pripco. And as Tyler mentioned, I'm pretty sure you've probably heard of Pripco, what we've been doing for the past couple of months. We're actually the first tokenization platform that was able to tokenize real estate in the UAE in a direct partnership with the land department, also licensed by VARA. I'll walk you a bit through what we've been able to do, and essentially the key differences between the traditional model of crowdfunding or fractionalizing real estate versus what we're able to achieve and all the benefits of tokenizations, essentially. So fractional ownership is not a new model. We have not essentially reinvented the wheel from that sense, but it has opened up a lot of doors for investors globally. So it has obviously given the ability for a lot of people to have shared ownership. So through SPV models, you're able to get a portion of the investment that you're doing into a property or real estate. So that's definitely been one of the greatest advantages of traditional fractional ownership. It has reduced the entry barriers. So as low as 500 dirhams, in our case, you're able to invest in Dubai's real estate. It allowed you to diversify your investment as well. So instead of putting, let's say, 3 million dirhams in a single property, you're able to diversify it across multiple properties at the same time. And obviously, you're still receiving that passive income, which are all the benefits of investing in real estate. So passive income, but also capital appreciation to that investment. However, it does come with some drawbacks and complexity in the model. First of all, the SPV model in itself, it's a middle layer between the investor and the actual asset class, which brings obviously a lot of cost to it. So setting up an SPV, that's not only something that you need to set up once, you always need to renew it, so that there's a lot of cost that comes into it, but there are also costs associated with SPV setups that you also need to pay upfront. Limited liquidity, and that's also linked to the SPV, and somehow because there's a lot of let's say administrative operational complexity when it comes to the SPVs. There's only 2 exit windows in the traditional model over a 2-week period of time, so you're only able to liquidate within that time frame. And essentially, when changing the name of one person on that SPV, it takes a couple of weeks, so it's not very straightforward. Whether it's one person or 100 people, it's the same effort that you need to take. Obviously, a lot of fees and the operational complexity, as I mentioned. So these are all the drawbacks. What we're trying to achieve out of tokenization, and what we've built also successfully with the land department and VARA, is, first of all, I mean, 3 problematics that we're trying to solve. Number one is the ownership structure. There's no need to have SPVs anymore. You, as the investor, are the direct owner in the property. So on the title deed that is getting issued by the land department, you will have the names of every single investor that has invested in this property. And individually for the investors, they will have a share certificate issued by the land department that is giving them the legal right to that ownership in this specific property. So that's, if you want, step number one, that's what we've been able to solve. Number two is liquidity, and I believe also my colleague here, Scott, has mentioned that quite a few times. Liquidity, when it comes to tokenization, what you're able to do is list these tokens at any point in time for trading or the secondary market without having the need to have exit windows or modifying SPVs and so on. So you're able to have a marketplace where people come in, list the price of the tokens, at obviously a valuation that is predetermined by an independent valuator, but then you always have the margins that you can play around with to have a bit more liquidity if you want to exit quickly. So you can put a discount, you can put a premium as well. But also connecting it to different exchanges that could also potentially support liquidity, or also potentially market makers, right? So these are all the potential benefits that we can have around the secondary market and the liquidity. And very, very soon, I hope in a couple of days or weeks, we're able to open that up on the platform also for the secondary market for our investors. And also, finally, the fees are much lower. The land department for the specific project only has decided to reduce the DLD or registration fees from 4% to 2%. So that's essentially for people not living here in the UAE. That's your registration fee that you need to pay to the land department when you're purchasing a property. So that's slashed by half. And that's only specifically for the pilot phase. Later on, it might be different, but specifically for the pilot stage. But also not having SPVs, that reduces the cost, and trustee offices. So essentially the middle person that is making the transfer between person A and person B, that's also eliminated because everything is done through tokenization and the partner control alt that is essentially the engine behind it all. So in a nutshell, the simplicity of real estate is now accessible to even more people. Liquidity has also been kind of resolved, and finally, and which is also the most important point, is that you're able to get something that is under your name, and that's a very important point, and no other government in the world has been able to do this up until now. And obviously kudos to Dubai and the land department and VARA for framing the framework around this and bringing it to the market.
Great, Joseph. I would I think as any discussion in Dubai goes, real estate is involved. So I think that's where I'm going to start. How do you think this impacts the property market and real estate market as a whole within the UAE?
Yeah, I mean, it perfectly lies within the DLD and the Dubai government vision of D33, which is one, tokenize around 30% of Dubai's real estate, and two, provide more than $50 billion in transaction related only to the tokenization space. That means that you're providing more transactions for the land department. And obviously the phase one of the project is only for UAE residents specifically, but very soon we're going to see international investors coming in on the platform. And what that means is that you're bringing investors from all over the world to have access to such a platform, which obviously brings more transactions and money to the country. So it's only moving into the right direction for sure.
So I'll borrow from our Q&A questions here. So broadly speaking, what in terms of volumes and interest are you seeing?
So very good question. So we've launched the platform around 2 months ago. We had 9 properties on the platform so far, and we've seen a total of 2,000 investors and only just 9 properties in 2 months. So that shows quite a good demand, and the properties were actually quite fully funded in minutes and seconds. For 2 reasons. One is because there is a huge demand obviously on the real estate market in Dubai, and number 2, the technology behind it. People wanted to be part of the technology and be early adopters as well. and also believing in the real estate market of the UAE and its potential growth. But also in terms of yield or returns, what we're looking is as an ROI or net ROI per annum, you're looking at anywhere between 10 to 12%, even for a few properties is slightly higher than that. And for net yields, that's your actual income that you're receiving on a monthly basis. You're looking at something between 5.5 to 6.5% per annum net of all the fees, obviously. So if you want to compare it to any other income generating asset class, whether it's money market funds, fixed deposits, or even short-term bonds, obviously the yield is generating much higher than the current interest rate that are in the market. So it's a good alternative for people to put their money in and receiving monthly income and dividends on their investment. And at the end of the day, if they want to liquidate, they have the option on the open marketplace. So there is no 1 year lock-in period or anything of the sort. There's a 3-month lock-in period for the current stage, and then you can technically sell your token in the secondary market.
Thank you. And I'm conscious of time. Before we move on, just quickly, how open would you say traditional real estate developers are to exploring tokenization projects?
Of course, I don't want to speak obviously on behalf of everyone and them, but we see in the market that a lot of these developers are definitely open to it. They're already in conversation with the land department around it. They want to launch their own platforms as well, and that only proves the business model for us, and also what we built with the land department. So definitely, I see more developers coming in. I see it also as another channel for them to sell their properties. Another source of income for them. Also the land department is also working on developing new strategies for this tokenization, whether it's commercial or off-land property. So it's not part of this pilot, but I'm pretty sure at one point we might open it up. And so it will be a huge benefit for all the developers and players in the market for sure. And we're happy also to partner with any developer that wants to list their properties on the platform at the same time. They don't need to develop on their own. They can come to players such as us.
Wonderful. Thank you so much, Joseph. Exciting, certainly, to hear about that. And for everyone who's sending in Q&A questions, I'll try to get to them during the speaker presentations, but anything that I can't, I'll move to our panel Q&A, so keep those coming. And next, from Polytrade, we have Milind.
Hey, Tariq, thanks. Can you hear me?
Yes, can hear you fine.
Let me just, I did spin up something for this.
Great, and just to add, so Milind, please, go ahead.
Okay, thank you. Thanks, Tariq, for having us, to Klaus as well, and good to see a lot of familiar faces on the panel. I guess it is a small community here in Dubai. So for those who may or may not know us, I am the Chief Strategy Officer at Polytrade. We are essentially kind of a gateway to RWAs. Most known for our front end, which is kind of like an OpenSea for RWAs, you can call it. We are an aggregator. We aggregate today close to 7,000 assets from 75 plus issuers across 9 asset classes, and essentially give the user, from discovery to purchase to relisting of these assets globally. In the past year, we've done about $4 million in GMV. What's not as well known is we do a lot of bespoke technology work as well. So we are an MTN partner with MasterCard, developing solutions with them on trade finance and interbank transfer of assets. We also work with a few governments in Southeast Asia on carbon credits, and are working with a logistics player to do the tokenization of their trade finance as well. We're backed by a few marquee names, including some of our friends at Polygon. And then among us, our partners, of course, there's MasterCard. We're deployed on 6+ chains now, working with 75 issuers. So I thought for the purpose of this webinar, I'll go more into some of the learnings we've had in this global market, working with so many issuers and seeing what the trends are. We've been doing this for over a year with multiple partners. So maybe we can start with what has worked. And then we've seen most of the traction come in on yield side. Obviously, stablecoins are the biggest one, but on-chain rails, T-bills, trade finance. These have been the breakout sectors till now. Commodities, another one that we've seen. But the user groups have been mostly HNIs or crypto native treasuries, whales, mid-market, kind of family offices and those kind of users. We still haven't had the breakout moment in institutions or retail, in our opinion. Where do we think the puck is going? So, there's been a big transformation from about 2 years ago when a lot of issuer partners were tokenizing and bringing assets to distribute to Web3. And I think that is definitely something that, the listeners here should not look at. The way to go is you bring an existing value chain and simplify and optimize it with Web3 or blockchain technology, right? Go to traditional channels. If you're trying to sell real estate, go to the traditional channels in real estate to sell it. Web3 is not your consumer. The second place we think there's a lot of action that's going to happen is, bespoke assets, or that were hard to access for a lot of users, right? So something like what market making became through LPs in DeFi. The same model is happening in real estate, in payment financing, etc., where they're opening up and democratizing these markets and these yields which were never available globally. And the latest trend that we're seeing is more, packaged on-chain yields, packaging them for the traditional finance world. So you could have basis, something like Athena, you could have lending strategies, all being packaged, being put as equity and being placed through tokenization. We still need a lot more work in the ecosystem on trust and transparency. So just to kind of add to that, there is, amongst, we've spoken about 200 issuers globally, and there is so much difference in what they offer, right? So to take an example, say if you're tokenizing treasury bills, there are models where there are funds, something like an Open Eden, where you're tokenizing fund units, which is the best way to do it. Or it could just be an SPV setup where you're just tokenizing corporate debt. So there's a lot of transparency that's missing in the market, and there needs to be, I think, as an aggregate, as part of our job, also to bring that into the ecosystem, so users can digitally kind of ascertain what they're buying and what rights they have. And then a big kudos to Pripco actually and what they did recently in Dubai, which is integrating fiat payment flows. I think the whole paradigm of having stable coins is great, but to really activate retail users, I think it needs to be completely abstracted, and that means going bank to bank in those payment flows. And I think that was a big unlock, and it's something for all of us to really look at when we look at traditional channels and making that work. And lastly, a little bit about interop. I think standard, and I think Klaus is going to have a big kind of PR on this, but there are a lot of standards emerging, and there needs to be more interop and standardization on the token side. Really quickly, what are we excited about in UAE? It is real estate, of course, and we're working on this in the background with a few partners here. But just to kind of leave some thoughts with the audience here, it's a huge market, right? Already, there is a huge profit pool, not just the volumes, but the profits that currently are in selling and buying real estate are really massive. But what could this become, right? So, for example, if you look at how much stocks trade from a turnover to asset base, it's kind of 1x, right? Real estate is at less than 0.3%. So if there is $100 of real estate, only yearly it's trading, 0.3. If this starts trading like stocks, we could look at a 100-fold increase in that, right? So it goes from nothing to really sizable if we can even get somewhere near how stock markets trade. And then on the ground, we're seeing very interesting. We've heard from a lot of brokers and a lot of developers of their interest with, after what Pripco did, especially. But there is some disintermediation coming. And I think brokers are a little concerned about where do they fit in all of this, right? So, I feel there's an opportunity there, not for us, for someone to come and take that market, to work with them as a traditional channel. And then on the lending side, there's a lot to do as well. For example, off-brand property, it's very hard to get a loan. Almost you can't do it. Once the tokenization happens, can we start doing that through DeFi? It's going to be a big unlock there. Can you do pref equity? There's a big demand from developers for pref equity. So they have 70% bank, and then can they really finance the other underlying equity below that? So just something to take away for all the listeners, what we're seeing in the market and in UAE.
Great. Thank you, Milind. I want to make sure we have time for questions here. From our audience, they asked, what kind of quantum and volumes are you doing monthly for RWAs?
Yeah, so as I said, it's a 4 million yearly GMV. So you just break that down by 12, that'll be a run rate, yeah.
And second question that was directed for you. Can you trade future carbon credit contracts on the platform?
We do not have that yet. No, you cannot today.
Okay. And one thing I thought was quite interesting, you mentioned two aspects that are still emerging. So that's the involvement of the retail market and further payment channels, and I think banking infrastructure for platforms such as yourself. And this is something I know very well, the challenges for crypto exchanges and really any digital asset platform. Banking remains a huge challenge. What do you see, what kind of direction and what kind of momentum do you see for, I think, the ability to form good banking partners to support your growth?
I think it's evolving. There are a lot of new neobanks that you can work with now. It's at least in the UAE, it's gotten much better. But the point I was making, Tariq, is a little more deeper than that, right? So there is something we work with institutions a lot on, which is called delivery versus payment, right? So what you can do with stable coins today is you can transfer the stable coin and in the same transaction receive the asset token, right? Which is a big unlock, means immediate delivery. Can we do that with banking and fiat payments? Because that's going to be the unlock. We do not need to have the asset leg and the payment leg together, right? Can we have the payment leg off-chain and the asset leg on-chain and still do DVP? So those kind of, I think, are the next advancements in really blockchain technology, and we're working on some of that with some of our payments partners.
Excellent. So Milind, thank you so much for this. We have to move on to our next speaker, but appreciate the time and the excellent presentation.
Thanks.
And next we have Sohail, director at Tokenscope.
Hello, thank you for the excellent, it's a pleasure to be here, and I'm just going to be sharing my screen. So just to try to get that up there. Okay. Okay. So thank you for the introduction. My name is Sohail. I'm the senior director at Tokenscope. And today we just wanted to go in, and it's a pleasure to be joined by such a star-studded panel of experts within the area. I think when you look around the panel, we have really, really interesting perspectives. I think most of the attention right now is coming to UAE, rightfully so. And what we're looking right now is a serious point of inflection in where tokenization and RWA is really being treated as a new asset class that can really take over and revolutionize the financial markets. And just to go into that a little bit, I think I'll try to keep it short based off time, but we've seen a lot of indecision within regulation based off the securities and the crypto. And the point here is that regimes that have usually we've had security tokens for quite a while now. We had the first STO that was initiated in 2019, and a big reason as to why that hasn't really kicked off is because there was a lot of stringent laws that required investors to be accredited, and they deemed a lot of tokenization to be securities. And what that has done is that it's created a new hope, a new optimism for the RWA category, where these tokens are not really necessarily deemed as STOs, but you know, they've been categorized in that way. And what we can see is that when regimes are too strict, innovation usually goes offshore. And you know, based on the current state of RWA, this is based off RWA XYZ, is that we're looking at a $30 billion you know, market as of now, where we have roughly 372,000 asset holders and 272 issuers. Now, if we break that up within the sectors and the assets that are being tokenized, excluding stablecoins, we're looking at treasuries, bonds, private credit, which, to my surprise, was a massive you know, asset, commodities, funds, stocks, and real estate. And what's really interesting here is that by law, if you look at all of these assets, these are tokenized, should be tokenized as STOs. Now, just because they're mentioned on RWA.xyz doesn't necessarily make it an RWA. Now, I think that definition is very important to keep in mind, because, you know, I think when I go back to my earlier point about a lot of innovation in the tokenization space is happening offshore, this is a big part of it. And we can see the massive you know, markets that are happening there. Technically, if we're going to call RWAs here, the only two real RWAs here are commodities and real estate. And that's something that was further demonstrated when we looked at the Dubai Land Department's recent test that they did, the pilot, which was essentially tokenizing the real estate. And that was done a few months ago. And we have Pripco here, who are very fundamental to playing a big role there. I believe within this current phase, most of the tokenization that is being done as per that pilot is direct tokenization model, which you know, we also have the SPV model and the bonds model of tokenizing properties, which, you know, it allows for I believe one of our panelists mentioned how you can actually provide lending in property development, which in this area is very difficult considering the stringent requirements that are there by the banks. So I believe that's one of the phases that will be added to allow for bond structure tokenization to happen. But as of now, the current pilot is really just a direct tokenization model as opposed to SPV. Another important note is that within this $30 billion industry that we're looking at RWA, 100% of that has been structured with SPV. And what is really revolutionary here is that the UAE government has set this aside, and Dubai, quite frankly, has set this aside and said, we're going to look at directly tokenizing our properties, our title deeds, our assets, which is creating a lot of hype, and rightfully so. It's never been done before, and that is a significant milestone. We have to see how this evolves. It's still a test phase. It's in the first phase, and they're opening up as of now.
So yeah, sorry to interject here. I just want to make sure we have time for some questions here. So just if you'd like to wrap up and any other points, please do so. Yeah.
Just based off some of the current things that we're looking at, I think one of the important facets to look at tokenization, and I think different asset issuers right now that are looking to come into Dubai really want to, you know, optimize and try to find a good model as an asset issuer or as a platform operator. And I think Dubai right now is opening up in terms of the ARVA model. And in order to acquire an ARVA model, you need to have a a licensed broker-dealer or exchange license. And in addition to that, you would have to have a Category 1 ARVA license. As an asset issuer, you could just opt in and get a standalone Category 1 ARVA license, but that would still require you to have detailed white paper, risk disclosure, governance protocols, and a full compliance team. However, you'd be able to partner with one of the existing ARVA-based companies like Pripco or Tokenvest and issue your assets or list your assets on their platforms. From our perspective at TokenScope, we're working very closely with FATF. Now, what we're doing is essentially making sure that the platforms which are operating are doing so in a compliant way, and that they're not facilitating money laundering of any order. And that's based off our approach, which is consistent to FATF, where risk in this area is referring to money laundering and terrorist financing. And we have very, very strict controls and processes to make sure that those platforms are operating risk-free and are able to manage and control their risk in an appropriate way. So
Sohail, if you could leave us with one red flag, or generally what red flags should we look for when investing in these type of RWAs or any offering through one of these platforms?
I think right now we've mentioned a lot about tokenization in UAE, but we didn't mention Abu Dhabi. So the ADGM, as you know from your experience in crypto.com, there is a tokenized product there, even the realized T-bills that have been offered there. But those are mainly focused or only focused to accredited investors because it's classified as securities. When you're dealing with RWAs, it's open up to retail. So you'd always have to be cautious that what you're actually investing in is actually, giving you redemption and giving you ownership to that asset. So making sure that that asset is actually there, everything is on chain. So those things need to be checked beforehand.
Excellent. Sohail, thank you so much. This was very informative, and sorry we don't have more time for questions here, but maybe we can get to it during the panel Q&A. Next, we have Kevin Unai, founder of RWA Inc.
Yeah.
Hello, Kevin.
First and foremost, thanks to Klaus Scanning and you, Tarek, for setting up this amazing AMA and this strong panel. So RWA Inc. is a very, very big RWA ecosystem, actually, of hundreds of partners that are all, you can say, integrated into a solution. We have a very big tech offering consisting of both technology actually from DigiShares, but also other Web3 technologies that we have invented ourselves and developed ourselves. And what we really have been doing is we've been very focused on the liquidity side of the equation for real-world asset tokenization, because one thing is to tokenize, but it's also a very, very big play to get the actual liquidity in and get the holders to click and buy the tokenized assets. So we created our own token, listed it on various exchanges, and really have been focusing on rolling out that token, and will be continuously rolling out the token to get, you can say, a mass amount of holders to be part of our ecosystem, and thereby bring in liquidity towards our both partner assets and also their own assets we will tokenize. So that has really been our focus. We have been extremely good at developing platform technology that can support this, and we are very, very diligent in the way we map out all the ecosystem, actually. So we cover both all wallets, all auditors, and all kinds of other elements into the equation. So we basically have a client service platform that manages automatically all our partners and suppliers, And on the other hand, we then have global databases of mapped retail investors, accredited investors, and institutional investors. So we are really looking at you can say the market as one, and we are really trying to make it global. And that's why we've been very focused on the data side of things.
Sounds like
Now,
you're also covering all investor classes as well, so kind of a holistic approach to this.
yeah. So we are basically a facilitator. We can provide the technology for anyone, but we can also list on our own platform various asset classes. We have been focusing first and foremost on private equity and company founders and utility tokens, but now going real hard into also real estate and doing various partnership and speaking with various regulators and so on and so forth. So we are this facilitator who can plug into almost anyone, and we see ourselves as very agnostic and very expert in, especially you can say the token side, the tokenomics, and getting our tokens out in the market and listing them on the central exchanges and so on. We have a great team doing that. So yeah, that's in short, you can say the model. Very data-driven, very focused on the user experience, finding out exactly how the different user profiles with fewest possible clicks can invest into the asset classes, focus on the UI, conversion, and all the nitty-gritty, nerdy stuff that we love to do every day. When it comes to
Awesome.
when it comes to the workflow and the execution of the SaaS and all the contractual parts, that's also something we have developed. So we have really a very disruptive solution altogether. And we are in Dubai right now, meeting with a lot of interesting companies, preparing ourselves to help out any, you can say, offering to the developers or any company developing and wanting to offer their solutions to developers. We believe we have the winning tech to support that place. So yeah, we are.
Kevin, may I ask, just to stop you there,
Yeah.
what do you think the key ingredients are for a successful RWA tokenization project? Because you were kind of touching on that. Like, what do you need to know that this is something that's going to work, or at least have a good chance for success?
Yeah, I mean, real estate is one of the great plays because it is something that now can be offered to the masses, and you can own fractions of it, and you can actually execute it on the chain very, very easily. So we strongly focus now on getting us ready for that play. As explained, we are fully offering utility tokens now, but really going into the selling of securities in various different forms with partners and so on. And I believe that real estate will be the next play. That's why we are here, and we are meeting with a lot of people over the next months here. So it's going to be very interesting to see the feedback on our platforms and offerings.
Yeah, certainly real estate, I think, is probably the most like well known and almost, okay, I'm afraid to use the word tangible, but I think you know what I mean. Like, this is the one we can kind of get our arms around and understand. But what would you say is kind of the maybe underexplored or up and coming type of use case?
Yeah, so we get so many inbounds every day from all over the world, right? Because we are a global company and we have focus on the whole world as our platform clients. So we see bonds, we see IP rights, huge amount of commodities, all kinds of commodities wanting to be tokenized, mines, and yeah, also luxury goods. We see a great demand for yachts, airplanes. Yeah, so actually everything you can imagine, you hear that they want to tokenize now. So we are in a very, very big transformation when you look at the market in general, and it's very, very hard to actually select where you should go because opportunities are everywhere. So it's also important to say no sometimes to really focus on what is important. Yeah.
Great. And does what kind of role is your company playing in supporting the legal and regulatory compliance projects? Because I'm sure you're getting all sorts of great ideas that are being thrown your way. How can we make this work? But of course, I think the legal structures and doing this in a regulated fashion is kind of paramount to making this successful.
Yeah, we have our own great legal team actually working nonstop, 7 days a week, working on getting us approved by various governments and regulators in various jurisdictions. We, yeah, do all kinds of studying ourselves of all the rule books to know what structure we can propose both to our issuers of assets and also for ourselves. So it's really an ongoing process and something that is quite complicated actually. And added to what Klaus Skåning said initially with the different structures, we look at all those. We look also at prospectus exemptions in some jurisdictions where it's possible to actually tokenize securities under these exemptions and many other things. So it's a very exciting process, and we hope to be also working together with licensed companies in offering our platform as a support for their go-to-market strategies.
Thank you, Kevin. And I think this is one of those rare times where you can say the legal and compliance aspects are exciting. This is the audience here certainly enjoys that, but maybe not the wider population. But I know this group definitely finds this very, interesting.
Yeah. No, we've been writing quite some policies, and it's a hard work, and it really takes a lot of discipline. But it's something that needs to be done, and also, yeah, the white papers need to be compliant. There are many things that need to be compliant in order to go to market, right? Audit is another thing, and so on. So yeah, you
Absolutely.
You need to look at yourself and really say where can we improve and get that work done in order to be in this market for sure.
Great, Kevin. Thank you so much for your time and appreciate your insights. And I think in speaking of legal and compliance, this is a good transition to our next guest here, Matthew Neiman, lawyer for CMS Law. Very nice to have you here, and Matthew, over to you.
Hi, Tarek. Thanks very much. Can you hear me okay?
Yes, can hear you fine.
Excellent. Yes, I'm a lawyer. My name is Matthew Neiman. My firm is CMS. We're a global firm. We've been in the UAE for over 10 years. I've been with the firm for 4.5 years building up our crypto and digital assets practice. We moved out here to Dubai last year, and I'm leading our fintech and digital assets practice in the Middle East. I can see that on my end, everybody's frozen. I don't know if that means I'm frozen too, but
I can still hear you okay and see you.
Excellent. Yeah. Good. Okay, I'll carry on. So I had a bit of a dodgy connection, which is why I was a little bit late. Sorry about that. Now, in the first part of this series, I talked about the legal and the sort of non-regulatory legal issues around tokenization, and that is available on YouTube along with all of the rest of the webinar and the panel if anyone wants to see it. And then, as you, Tarek, and as you guys were just mentioning now, the regulatory side is the one that everyone focuses on when it comes to law. So I won't repeat what I said in the first series, but I would encourage everybody to focus on the legal side apart from regulation. So that's the contracts, the enforceability, the security, all of those factors which are the plumbing and hold a tokenization structure together. If you're licensed and if you're compliant with regulation, that's great. You still need all of the legal work that goes into the back end, if you like. So today I'm gonna talk about some of the regulatory issues, and then again on the last session was focused very much on real estate. I think today it's a broader discussion, and I prepared some PowerPoint slides. Would you like me to try to share those, or should I just waffle
Please
on
do. No,
for what is it,
yeah.
5 minutes?
Yeah, please. Mhm.
Okay, let me see if I can do that now. I will see if I can share the screen.
And while you're doing so, I have to say, I'm very impressed with the amount of questions we have coming in here. So we are, I think, well prepared for the general Q&A session shortly.
Okay, can you see my screen?
So you're sharing, and now I can see it. So I see your deck here.
Okay, excellent. Good stuff. So tokenization in the UAE legal and regulatory update. That's me. And I should just mention, we advise on tokenization all the time. It's not the only thing we do, but we do a lot of it. And we advise on the corporate structuring and the commercial aspects, the finance agreements, market entry, and the regulation. But as I was saying, regulation is one part of it. I thought I'd pick up on a few things which I'm getting a lot of questions about. And I can see some areas of confusion. And so I thought I would just talk through some of those. The biggest one, and I think this has been touched on already, is the SCA's recent publication on security tokens and the rules that they published over the summer on security tokens. This is really a very important move for the UAE and puts us ahead of most other jurisdictions. The confusion, though, is because of the reference to real-world assets. Now, obviously, VARA has a real-world asset framework, which again was updated over the summer, at the beginning of the summer, and defined real-world assets tokens. And real-world asset tokens can be a token that relate to any real-world asset, as long as it's a real-world asset and it's not a digital asset. Now, those real-world assets could be gold, it could be art, but it could also be a security, could also be some kind of financial instrument. So security tokens are a subcategory of real-world assets. So that's the backdrop. And then later in the summer, the SCA Securities and Commodities Authority, publishes rules confirming that real-world assets, security tokens, are securities, and they very clearly, and again, this is where they're sort of ahead of most of the rest of the world. We are ahead, is defining these security tokens as being where the ownership of the security is recorded on chain. There are various ways that you can do that, but that's the essence of it. The determinant of the ownership has to be the chain. The record is on the chain. So if it's a share, for example, an equity share, that share register effectively has to be on chain. If you simply have a digital record of an asset, or indeed a payment token, as I've said here, that is not a security. Equally, real estate, commodities, art, these are all real world assets, but they're probably, they could be securities relating to them, but they are not security tokens. So this has caused quite a bit of confusion. I hope what I've explained just now clears that up. If not, you can ask me afterwards. The next thing that I want to mention is licensing for issuance and distribution. Again, although the regulators are doing a fantastic job and we're ahead of most of the rest of the world, there is still a bit of confusion. And I'm sure that this is going to continue to develop. But right now, we had an update over the summer from VARA, and it makes it very clear that issuing security tokens and indeed other categories of tokens requires approval from VARA. But again, when it comes to security tokens, not only do you have to have that VAR approval, but you also will need to consider the ESCA, the securities regulatory regime. So you have two regulatory regimes that you need to consider. So real estate tokens, if they're a direct tokenization of the real estate, like with the DLD pilot, that does not involve securities regulation. But if it is a share in an SPV that owns some real estate, or if it's a debt instrument related to real estate, then it would be a security token. You'd have to consider SCA regulation, and unlicensed issuance would involve a regulatory breach, and that's why it's important to consider. So that's the issuance side. And then on the distribution side, this is generally the bigger issue in practice, because you can have your licensing sorted in the UAE, or indeed you might be doing it somewhere else as well. But let's stick with the UAE, which is what we're here to talk about. You've got your regulatory licensing sorted for issuance. You then need to have distribution. Now, within the UAE, you will need to have either your own license, or to make it easier, you can use Tokenvest, or other alternatives are available, and you can benefit from their licensing when it comes to the issuance. And the same thing goes for the distribution. You also need to have a licensed distributor. Most clients go on.
Matthew, quickly here. Is this for someone who isn't licensed themselves? They need to partner with someone who has obtained the license?
That's right, exactly. So if you're not licensed yourself, then you will need to have a partner who is licensed, who can do the issuance and the distribution. We're focusing on distribution right now. Yes.
Great.
And
so
yeah, go on.
Please go ahead.
No, please.
I was going to ask. So we've been kind of UAE focused here, looking at the regulations, but how does this compare to other major financial hubs, for example, the UK or maybe Singapore?
Yeah, it is pretty similar. I mean, the rules and the technicality is different, but fundamentally, again, if you're dealing with security tokens, then you will need to have a licensed distributor. The exception is for institutional distribution or professional distribution, where your clients are in those categories. Then it's often the case that you can do that on an unlicensed basis, but it gets complicated.
And you're getting a request here to elaborate more on probably in the specific licensing in the UAE, and then we're probably close to time.
Right. Okay. Well, I'm going to try to whip through, and then if we've got time for
Please.
Q&A or after. So, so what I have discussed now is in the UAE under the SCA, under ESCA rules. I've also mentioned VARA, which is onshore Dubai. Obviously, the DIFC and the ADGM have their own rules. I won't go into all of those now, but just the fundamental question I've put at the bottom is, who is licensed to issue, who is licensed to distribute? You have to be able to answer those questions. And then I've got a number of regulatory updates. So VARA is still clarifying those new rules. The Central Bank of the UAE, again, very recently, although there are no new rules, at the end of the grace period, there was an initial grace period under the payment token services regulations. That came to an end a few months ago. A couple of months later, VARA had its own related grace period that came to an end. So now, if you want to, and I'm mentioning fiat backed payment tokens here. So these are essentially stable coins, what we would generally refer to as stable coins, but specifically fiat backed stable coins. If you want to issue them, you have to be licensed by the CBUAE. But if you want to convert them, then you need to have a NOC, a no objection certificate from the CBUAE, and so that is something which a lot of people are having to do at the moment. I'm just looking at my last notes and seeing, I think you said I'm at time, so I'm just seeing what I want to expand on, but I don't want to take us over time. So I think I'll just mention my takeaways, which is, tokenization is accelerating in the UAE. We are ahead of the pack, but the regulation does remain fragmented. There's no other way to say it. Unfortunately, it's just how it is, both within the UAE and across the world. So it is a complicated picture. You have to, this is my way of breaking it down. Issuers should look at the asset type. Then you need to look at what kind of regulator is involved. I mentioned before, is it just VARA if you're in Dubai, or do you need to look at ESCA regulation as well? And then look at what kind of license you need. And lastly, the UAE, again, I've said it many times, but I believe it's true, is really very pioneering and very progressive. And but it is not a light touch regulatory regime. It's progressive, but it's tightly regulated, and so that's why this stuff is important.
Matthew, thank you so much. And this is, let me just check if there's any specific Q&A directed here. Okay. Someone had asked, are security tokenizations, is this something that's going to be acceptable in a UK pension? I think that's pretty specific, but is this something that you're aware of?
I mean, I think currently, no. I think is quite an easy answer. I don't think that's something they'd be allowed to do, and I don't think that's something that most of them would want to do. The appetite is not there yet. I know that the rules have been relaxed in America. I think that's where the question's coming from. I think the UK is some way behind on that.
Yeah, I think in the US you have kind of special retirement and IRA designated accounts for these kinds of asset classes.
Exactly. The UK is something of a hostile environment still when it comes to digital assets and crypto, certainly compared to the UAE and obviously the States.
Well, Matthew, thank you so much. We're going to move into our panel discussion portion of today's webinar. And first, but let me say thank you to all of the presenters here. This is, I mean, an extremely fortunate occasion to have all of these, I think, subject matter experts here sharing some deep insights across, I think, a variety of topics. And I've certainly learned a lot, and I can see the amount of engagement in the chat and questions that people have been quite enjoying this. So with that being said, I'll move to our panel here and open it up for anyone. Please can jump in and answer, and if not, I may go ahead and just ask from our guests here. So I think to start, it'd be great to hear just quickly from everyone your perspective on the single most significant trend in tokenization right now with the UAE. My hunch is it's going to be real estate related, but would love to hear everybody's thoughts here. And Matthew, you're on my screen, so I'll let you start.
Okay, well, I think you're right. Real estate is, I think, what everybody wants to tokenize the most, and the pilot with the DLD and Pripco and Control Alt was groundbreaking, and everyone wants to follow in their footsteps. But we also see a lot of other assets that people want to tokenize. In the UAE, energy is huge. And so I've spoken to a number of people about tokenizing various energy-related assets, including we've for a long time had sort of carbon credits and that side of things, but we're also now seeing projects for tokenization of oil, and that could be absolutely huge. And then also other things, other commodities, securities themselves, funds tokenization. That is another thing which is, I think, global, and there is interest in the UAE. The UAE doesn't have the most mature funds market, so it's a odd situation that it's the most progressive in terms of the ability and desire to tokenize funds, but the market for funds is not as big as it is in places like London or the Caribbean or Luxembourg. So that's what I'm seeing.
Great. Do we still have Scott here? Because I saw someone ask about gold. I think that this is something maybe suited for TokenVest. Okay. So Scott has another engagement. Okay, no problem. I'll hand it over to Kevin for his thoughts on this. Not the gold, but just your general perspective on trends for tokenization.
Yeah. No, I think we all agree real estate is the biggest trend in the space right now, and that's really where the demand is. But as I said, commodities are also heating up dramatically. So I see it as a thing that is evolving in many directions, actually. So, but I would say that probably 90% of our inquiries are related to real estate right now. So I don't know if that has anything to do with reality, but that's how we see it, at least.
And so I'll call on Joseph here. So you know at Pripco you've had some successful launches and I think are well underway with I think operating a tokenization and RWA business. But what were kind of your lessons learned or new areas that you want to explore?
Yeah, I mean, answering your first question about trends, I would say definitely real estate is on top for a couple of reasons. Number one being the fact that it's the largest asset class in the world. That's the clear and obvious answer. Number two, it's the largest asset class here in the country, and that contributes to a quite a large significant percentage of the country's GDP. So a lot of people are putting their money into this specific asset class, whether it's through tokenization or not. So this is also part of the reason why a lot of people were very interested in being part of the pilot phase, and hence the reason why the properties were fully funded in a matter of seconds. Now, what other asset classes could potentially be? Literally anything. As you've mentioned, and I think Matthew mentioned or painted the picture very clearly, it really depends on what type of license you have, and this is where you can eventually tokenize. So if for us as a VARA licensed entity, we won't be able, for example, to go through commodities or securities unless we seek an ESCA license. However, if we look at, for example, funds or money market funds or private credit and so on, these are potentially stuff that we can look at for the long run. But as a company, for Pripco, our bread and butter is real estate for the time being, and this is what we're looking to grow. There are other types of assets within real estate that we can also look at expanding, right? So as I mentioned before, there could be commercial properties, off-plan properties, warehouses, data centers. So there's a lot of potential to grow this space, and not just for residential units.
So I'll pick on Sohail here, because you have really good insights into some of the data and kind of analytics side. What are you seeing as the trends when it comes to this topic from the kind of data and analytics perspective?
Very, very good trends. I think very bullish trends. When we look at the whole appetite that was, I believe the Pripco launch was something of a monumental success when you see the ambiguity that has been around tokenization and doing it in a regulated fashion. We saw that when we had this huge liquidity drain and a lot of silos in liquidity, and I think when we saw that the Dubai government came and put their stamp of approval on this project, that it sold out so quickly. And if we're going to do that with multi-asset classes, imagine what's going to happen then. So I think for now, VARA has said that they're going to be looking at gold as their next frontier as a commodity. And when it comes to other kind of securities, or I think really what's going to be really important is how we can broaden the definition of securities here. I can't think we can just label everything as a security. We need to have some kind of a longer definitions here, and I believe when those definitions are expanded on, then we're going to see more movement in RWA, because the STOs is somewhat of a very difficult process for people to actually just focus on as of now.
Great. So fun fact on the gold token, I was there for the launch at Paxos for the Pax Gold. So I'm a big believer in this. I think I firmly believe we're going to see many more versions of this, because the ability to transfer a commodity in this fashion is something that is of great value. Okay, and Ashwari, just from maybe the technical and protocol side, what do you think in terms of emerging trends?
Yeah, I think so. You were just touching on gold. I think one of the biggest thing that we have been seeing on gold is like when you look at Paxos and when you look at Tether, both of them are tokenizing gold, but the ecosystem of that gold is still not on chain, right? So what can I do with that tokenized gold apart from buying it? There's nothing else that I can do it. Maybe I can use it as a collateral, but that's pretty much it. Now, so effectively, one of the things that like I was earlier also talking about was like when we're incubating one of the company, what we're trying to go out and do is we're trying to open up an entire ecosystem. So like we just onboarded the biggest retail jewelry or like a gold outlet in India. We just did the same in US, Kitco. So effectively, the biggest buyers of gold retail, who is actually buying that, you do not get that access right now. So how you can actually go out and sell that. So effectively you have to get that distribution done. So we have like, that is what we've just been doing. Then effectively the second thing is, when you look at the trade volumes of gold, effectively, so the way we are bringing gold on chain with one of the partners is effectively where they're going to give you a yield on gold. And that is something that we have actually experimented with Rak Bank earlier, for like $150 million tranche, where actually we can generate returns on gold and give you a yield on gold, which today is not available. And that is why, like, that is one big missing piece. Like, if you are holding a gold token, and the third thing is, it's not as liquid. Like, if you go to Ethereum right now and you want to like swap Paxos, PaxG, or you like Tether's XAUT, you cannot do a $10 million swap right now. So that is like another big challenge, where people want to actually get into it and get out for a hedging mechanism. They cannot go out and do that. And like the fourth problem today is, when anyone is taking a gold loan today, like for a business purpose, people, the biggest challenge that they have is they are taking the loan in mostly US dollars. So you have to hedge your US dollars if you are not like pegged to US dollars. The second thing is, so your loan, you take a US dollar loan, then you buy gold. So your gold exposure is also there. So if the price of gold is going up and down, your collateral value is fluctuating. And then you have a bank interest. So together, this compounds to somewhere between 13 to 15%. And like, can I go? So what we are trying to go out and do is, can you get gold against gold? So there is no dollar in between, which means you don't have to hedge your dollars. The gold is the collateral, and the gold is something that you're getting. So effectively, if the prices go down of the gold, your collateral go down, and so does your loan. So I think that ecosystem is missing. So what we are trying to kind of focus on, from a trends perspective, like when we are looking at commodities and like tokenization, is how we can develop an entire ecosystem around it, rather than just saying that, okay, this is tokenized. Because effectively, I think everyone in the panel that we've chatted with, like, they've all said tokenization is not an answer. Tokenization is a means to an end. So what exactly are you solving for? Like with Pripco, like, can I go similarly, can I have a secondary marketplace? Or can I go out and create a mechanism where effectively I can go out and find ways where the liquidity would come in or new buyers would come in? I don't think just like you out in tokenizing something just goes out and says, okay, we've tokenized something, it's a magical wand, boom, like everyone is now buying tokenized assets. So I think that is where like the trends are going. Like we will see like in next 6 months, billions and billions coming on chain. So a lot of that thesis that, okay, like tokenization is happening will happen, but only those ecosystems effectively will kind of sustain, who are building that as an ecosystem rather than just like an individual project, which is just doing a part of the overall journey.
Great. Thank you for that. So actually, I have two pretty good questions from the Q&A that I think I'd like to raise now. So Joseph, I think you may be best suited for this one. The current pilot with the Dubai Land Department is still ending in fiat. How far are we away from end-to-end in crypto? Because as I think of this as almost a digital asset and crypto native product, I would be interested in paying with my own crypto rather than going through banking channel.
Yeah, fair enough. I mean, we still need to remember that this is still a pilot phase that needs to be kind of taken in a very slow and precautionary measures, I would say, because the framework is all obviously very new, and we need to make sure that everything is running smoothly. And there are phases that the Dubai government and the land department with also VARA have set, and obviously using cryptocurrency as a means of payment is definitely part of these phases. But not only that, everything eventually, the plan is to move everything on chain, whether it's transacting or the secondary market being on different exchanges, or even paying the yield as a stable coin. So that also potentially could be also out there. Also using your tokens as a collateral to get a loan that can also potentially be on-chain, right? There's a lot of stuff that you can do. I mean, sky is the limit on that front, but I really need to, let's say, clarify that it is still a pilot and stuff still need to take place in a very cautionary manner. And crypto payment will be there for sure. It takes a bit of time.
I think so too, and I wish crypto payments were available a few months ago when I bought my home in Dubai, or I wish I could have taken out a mortgage against my crypto holdings. So hopefully, these things will be widely available because there's certainly, I think, the market and the audience for it. Okay, so this one is for Matthew, and this very politely said Mr. Neiman, using a third-party license holder, as you suggested in your presentation. Hypothetically, third-party license holders may have been met with situations that can cause admin issues, such as being fined or reviewed unrelated to your product. So I assume that means kind of regulatory scrutiny. So how does the licensee or the licensor get affected by the licensee's action? So what are the kind of shared responsibilities there, the oversight? How do you make this work? Because that does put the license holder in a tricky position at times because they are responsible for ultimately all of the regulatory obligations.
Yeah, it's a really good question, and I haven't been asked that question before, actually, in general terms, and I wish Scott was here as well. But I'll try to give a kind of broad answer, which is that there's no perfect there's no perfect solution. If you're an issuer or someone who wants to launch a tokenization project, right, and there could be different components to that, and issuing is one component. So you're essentially doing something new and challenging. There's no perfect solution, but essentially you have a choice. You can either try to get your own license, which is going to take you a year, and you might make mistakes and you might get regulatory sanctions or fines, right? Or you can use a third party that has a license. And we're very fortunate to have Tokenvest and other companies like them. There aren't many. There's only 2 or 3 in Dubai, because you don't really have those in every jurisdiction. So yes, you should consider the reputation of that partner, but if they have their license and you could check their license with the relevant regulatory authority, then you're good to go. No financial institution in TradFi, for example, is perfect. I'm not trying to excuse anything, right? But if you bank with HSBC, you probably trust them, or with Barclays, or with choose any big bank, and you'll see that they've been fined billions of dollars by regulators all over the world. So again, I think it's definitely worth considering the reputation and the regulatory standing of the third party, but I don't think that you should be concerned in principle that they might not have in the past or in future a perfect record. I hope that answers the question.
I think that's good, and to add, so I've seen this in the traditional payment space, and it's a big challenge, and you need to make sure you have the right partner, because ultimately you're working together to ensure you're meeting your regulatory obligations, you're within each other's risk tolerance, and there can be times where if you're in I think this new kind of emerging space, that adds more challenges. And I wanted to actually get Joseph's opinion here. How would you assess who is someone you'd want to work with as a potential partner for tokenization project as the acting licensee?
Very, very tough question. I don't know how to answer that. But I mean, from our perspective, it's very important to look at a company or any type of partner that can scale a business quite fast, right? As a startup like ourselves, we've launched the project with the land department in a record time, but going to different asset classes or giving to different avenues, even expanding our current, let's say, project. We need someone that could also scale with us quite fast. So this is, I think, criteria number one for me. Whether it's tokenization or any type of other, let's say, service providers that we currently look at. So I think that's the number one priority that any company should definitely look at. Scalability.
Yeah, that makes sense. So I'd like to ask Sokhil. So looking ahead 5 years, what is your boldest prediction for tokenization landscape in the UAE and wider MENA region?
I think 5 years from now, we've already, we've seen the recent shift in tides, and I think when we get more, we're going towards an area where regulators are starting to work to, with it instead of against it. And we've seen the US, the SEC, be very strict against it. And I believe the Project Crypto, which is a very, very promising sign, will give us more, movement. I think when adoption comes from the US, where majority of the liquidity is being held, and the wider financial markets start to, tap into, I think that's something where we're going to be seriously, exponentially hitting those $1 trillion amounts where it has been targeted. I think there was a question in the chat about how is private credit being tokenized, and you could see it constitutes quite a large portion of the current RWA market value, but that's by definition, by law, as Matthew's here, he can attest to that. By law, if you're tokenizing private credit, this is a security. So it's very interesting how this has been kind of bypassed in a way where a lot of the major protocols that are out there that are doing it in a different way, whether it be centrifuge or different protocols that are out there, a lot of them on Polygon, who is joining us now. Imagine there was a time where these can be issued in a proper way, in a well formatted way. I'd love to see what would happen in that case.
Yeah, likewise. So I'd like to ask Kevin, what do you believe, in your opinion, is the biggest hurdle to mass adoption at the moment?
Oh, that's a hard one because there are, of course, a lot of hurdles when you look at both the reach, how to get out to the millions of users, how to make them comfortable in investing, and how to market towards them, right? So I think that's the biggest hurdle and something we are very occupied in solving that pain point of how do we get out to hundreds of millions of users, getting them to click and getting them to KYC, AML, and then onboarding them to be ready to invest with a click. That is something that takes a lot of work. Yeah, so I would say conversion is, of course, one of the big hurdles here.
And how would you say, if somebody is interested, but maybe doesn't feel comfortable investing just from lack of knowledge, how could they find the resources to educate themselves and be able to learn to jump in as an investor?
I mean, right now we are actually educating a lot of people in how this thing works,
Yeah.
right? I think it's very important as we as an industry stick together and have these kind of great talks and really speak about all the things you need to know. Of course, also educating the holders in how they find the great projects. What due diligence do they need to do in order to be sure that whatever they invest into is actually real, not a rug pull, that the smart contracts are audited and all that stuff. So I think education is an important factor, and I think we as an industry must educate the holders on this topic.
Yeah, thank you, Kevin. I mean, certainly, if you're jumping onto, social media and Reddit, there's a lot of noise that can distract from, the good projects and I think tech building that's out there. So it's important to get your information from the right places.
Yeah.
And we have a request here to get a deeper understanding on the DeFi aspect, and I think maybe Ashwari, you would be good to answer this. So, what relation in some of these DeFi protocols and platforms what kind of impact will they have on the RWA token market, and what services do you expect to be available?
I think like DeFi is something which, like, without DeFi, anything that you're tokenizing effectively is like it's not adding that much value, apart from being like, because effectively if you look at money market funds, even if tokenized, they are still relying on the traditional means. So they're still redeemed 24 hours like T+1. So they don't give you like an immediate availability of cash. So it does not solve that. What they actually so what is the next benefit? So can I go out and find or create a strategy using DeFi, which is giving me a better return? If that is something that can be enabled, and that is, I think Polygon is one of the only ones across the entire like blockchain space, which effectively has a fund which is sitting in DeFi. So for example, like Apollo's ACRED fund, which is kind of yielding natively around 8%. But like on DeFi, we have put it on Morpho as a collateral and then borrowed stable coins against it and have run a looping strategy. So that same fund, which gives natively just 8.5 to 9%, is giving us somewhere around 14.5%. So through a looping strategy. So I think if someone has to create an edge, like I said, I think in the earlier conversation also, like tokenization is not a magical bullet. What you can do with that tokenizer set is, so you need to understand what exactly is effectively being used, and like DeFi is the perfect place for anyone to enable it, and that is the role that DeFi will play. It will give edge to anyone who is actually going out and tokenizing it and using it in DeFi to generate better yields for the same asset class as compared to someone who is doing it off chain. So there will be like a lot of master distributors who effectively want to go out and distribute, and their like selling point would be, okay, if we are doing it through a blockchain, and on the blockchain you're able to go out and get a better yield as compared to someone with the same asset class not getting that yield. And that is something that would be enabled through DeFi only.
Great. I still think for mass adoption, DeFi is probably still a challenge for I think your everyday user, but always is going to be kind of where the cutting edge of development and technology is.
Yeah, I think like a lot of front ends are getting created. So like this is a very fair point, because today if I want to tell like even my family, can you go out and do that? It is difficult for them to kind of go out and do that. However, like I think a lot of companies now are looking towards the front end side, which it would enable them to go out and like feel as if like it is the same web to app. But the backend is replaced by the existing infra to the blockchain infra.
Yeah, agreed there. So we have an interesting question here from our audience. So this is open to anyone here. How, to any extent, do you see the opportunities existing for franchise operations and franchisees? For example, if a McDonald's had fractional tokenized ownership rather than a sole franchisee through an SPV, or with smart contract and DAO governance, how would that work? I'm thinking of a McDonald's with DAO governance, and that's a very interesting concept. But I'll open this up to anyone to share their thoughts on seeing if this is maybe a potential business model that could work.
So like there are a couple of projects actually who are doing something similar, not doing it with McDonald's, but like I think there like for all these shops which we like all these delivery shops that we talk about, like they always have some stores where all the goods are being kept and they are distributed from that one single point of place. Like you talk about Kareem, so Kareem has stores from where it is kind of going out and delivering the goods. And like there are a couple of companies who essentially are like tokenizing these stores. Like the idea is because like individually when you want to own that store, the price that you have to pay to kind of get that store allocated to you is much higher. So what people are doing is they are like right now as we speak, they are actually tokenizing and fractionalizing that store so that more people can actually hold it. And it does not like go to the DAO model, but it is just more like enabling more and more people because of the smaller ticket size to be able to go kind of go out and like take part in the economics of that particular store.
Great. Anyone else have any thoughts on this one? Maybe Joseph, this could be Pripco's next project, taking franchisees ownership in a fractionalized way.
If it's McDonald's, we don't mind. It's fine.
Yeah, okay, that's a good one. Okay, for Matthew here, how is the UAE's regulatory approach to tokenization influencing innovation compared to other hubs? So, as you know, said you've been in the UAE for the last year. Maybe you're seeing clients coming from other home markets to set up their business in the UAE. What kind of trends and what makes the UAE kind of a friendly environment for them to set up and run their business?
So, I mean, there's lots of good things. Not everything's perfect. The overwhelming factor is the general attitude. And that sounds a bit wishy-washy, but I think it's really important because whether you are an entrepreneur or whether you are a large corporate or financial institution, you want to know that you have the support of the people around you, and in particular the government, and so and the establishment, if you like, right, which is the people that are that have the power and make decisions, the authorities, the large corporations. In the UAE, there is a benign environment. There is a positive attitude, right? Again, it is a highly regulated jurisdiction, but the regulators are forward thinking. They are positive about encouraging business in this space and innovation. And that is just a world away from other countries. Obviously, there's been a big change in America recently, so perhaps it's coming around, but it's still going to take a long time to turn that ship around. But if you compare to Europe, the UK, where I was until recently, I think that that attitude, that positive attitude, the support you get from government agencies, from big business, for me, and I should say really for my clients, that I think is the biggest factor. There are many others.
Thank you, Matthew. So now we'll just get a closing remark from anyone, your kind of final thoughts on some of the topics today or from your presentations. And I'll start here with Sohail and go quickly through our panelists.
I just wanted to close off and say that it was a pleasure to speak on this panel, and I wasn't able to go through a lot of my material in my slide, but I a lot of points regarding how TokenScope is enabling a lot of platforms to, adhere to the compliance and AML. So if you have any questions in that regard, please message me on LinkedIn and I can share more details.
Thanks so much, Sohail. Joseph, over to you.
Yeah, also thank you so much for everyone attending this. Thank you, Tarek. Thank you, Klaus, also for the invitation. I think we're moving in the right direction. I think we're moving from a much well-established regulatory framework that both Dubai and VARA are establishing for RWAs. The first example was definitely the real estate project, but I'm pretty sure other asset classes are gonna get shaped into the same fashion. So we're looking forward to that as well, and we're looking forward obviously to keep launching new projects for customers and keep growing the platform. So yeah, again, thanks a lot. And if anyone has any questions related to what we're doing, please feel free to reach out to us, whether it's on social channels or our numbers or personally on LinkedIn. I'm happy to answer any questions.
Thanks, Joseph. Ashwari, over to you.
Yeah, thanks everyone for being here. It was a pleasure and thanks for the invite. I think from Polygon's perspective, I would just like to say anything that you're doing from a tokenization perspective, and you want to work with a blockchain, I'm here and more than happy to help you guys out in the endeavor and get my team to also help you out overall to get the adoption and anything else that you require globally.
Thank you. Kevin.
I also want to say thank you so much to DigiShares for arranging this amazing AMA and to the speakers for great insights. Yeah, go follow us on rwa.inc and our social media. Reach out also if you have any need for tokenizing your assets or utilizing our technology as a partner. Feel free to reach out. I hope I'll meet all the speakers personally. I'm in Dubai the next period, so I hope to meet you all in person and look forward also for you, Klaus, to hit Dubai. So definitely, thank you so much for an amazing AMA.
Thanks, Kevin. And with that being said, Klaus, over to you for some closing remarks on what's been, I think, an extremely informative and great session today.
Yeah, thanks a lot for great facilitation, Tarek, and thanks to the speakers. I think it's great to collect a number of people who all share the underlying motivation to further tokenization in the UAE and working against the traditional system, I would say, and making it more efficient, more transparent, less costly, and so on. So that's great. We do these webinars on a regular basis almost every month, so once or twice every month. And we have also, sometimes we do other events focused on the European Union or Asia or the US, which are also our markets. But I have to say the ones that are focused on the UAE are the most exciting ones. This is where we see the greatest traction, the greatest level of interest. And I think the UAE is special also because we see such a huge interest from the public sector, right? The regulators, the government, and so on, and even the large developers, right? This is not something we see anywhere else in the world. So thank you very much, everyone, for participating today. If you have questions for anyone here, you can also just contact us. We'll spread out the questions to the right speakers. And if you need someone to help you with the tokenization travel or journey, you can also speak to us. Thank you.